Welcome back. ARK Invest CEO Kathy Wood telling CNBC today that a, quote, reality check could be coming for AI valuations. And Bill Gates saying on Squawk Box that a ton of these investments will be dead ends. The possibility of an AI bubble, of course, continues to be a key focus for the markets, and it is as well the focus of the latest CNBC Fed survey. Steve Leisman has those results. Steve.
Yeah, maybe one of the most important economic and financial things going on, but concern is high among respondents, David, to the October CNBC Fed survey that AI stocks are overvalued or in a bubble. At the same time, respondents somewhat more optimistic about the economic outlook overall. Let's go to it. We asked people to characterize AI stocks. 24% say extremely overvalued, 55% somewhat. Put it all together, that's 79%. You can see correctly valued, just 5%, and somewhat undervalued, 3%. On average, respondents think AI stocks are overvalued by more than 20%. John Lonsky, president of Lonsky Group, writing into the survey, quote, once the AI bubble bursts, only the financially strong participants in the AI space will survive. It's a reason why we're looking for pretty lackluster returns, at least the average of this group for the S&P. It's really a 1% decline built in, a little bit better, around 5% from yesterday's close to the end of 26, and about 12% to the end of 2027. Economist Hugh Johnson, he's among the optimists. He writes in, says, equity earnings should remain strong through 2027, and in response to declines in longer-term interest rates and higher earnings, stock prices should move modestly higher. We do not see the end of the cycle bull market here and start of a bear market. And one of the things that's underpinning the optimism, the chance of recession going down to 33%, still a little bit elevated, but down from the concern earlier this year. And you can see that in the GDP outlook chart, which if you go through 5 of the last 6 surveys we've done, the outlook for GDP has gone up, only one where it went sideways. So getting to around potential, remember back here on my right, 0.82, that was the low around the reciprocal tariffs when people began to be concerned about recession. And then a little bit more than potential over the next 2 years. Seeing here the unemployment rate seen topping out near 4.5%, while the Fed forecast to cut a total of 100 basis points by the end of 2026. We could get 75 of those consecutively, guys, October, December, and they're toying with the idea of a consecutive third cut in January. Guys?
Steve, that's a lot. Great information. We'll hopefully dissect it a little bit later on. Steve Leisman this morning.